We've worked with hundreds of business owners and noticed that there is one common fear that they all have when it comes to business loans. And that fear is, could I have found this cheaper somewhere else? No one wants to be paying more interest than they should, and neither should you. I'm Guy from First Oak Capital. We specialise in securing business loans and asset finance for UK companies that need funding to grow, to invest in new opportunities, or to overcome cash flow challenges. So whether you're expanding, upgrading, or covering unexpected expenses, our job is to help you access the right finance quickly and with the best possible terms. By the end of video 4, you will be able to spot red flags in your business and fix them before applying for finance. You will understand how to make your business look like an ideal customer for banks and finance companies so that they offer you their best terms. This way you'll know for sure that you aren't paying more than you should do. The banks and finance companies are the ones who will ultimately decide whether to help you and how much they are going to charge based on a long list of facts and figures. The purpose of this short video course is for you to understand what those things are and how to present your business in the best possible light so that you can maximise your chances of being accepted at the lowest possible interest rate. Before you start the application process, there are a few things to consider that can help speed things up and improve your chances of approval. By getting those in order now, you'll not only make the process smoother, but also position yourself as a strong applicant, making it much easier to secure funding at the best possible rates. Let's go through what you need to prepare. Monitor your credit report. Your credit score heavily influences the interest rates that you will be offered. Routinely checking your business and personal credit report allows you to spot errors or anomalies before they impact a lender's decision. If you do find any inaccuracies, act swiftly to have these corrected if at all possible, and this vigilance helps ensure lenders see an accurate reflection of your creditworthiness. Bank all your takings and maintain clear revenue records. It might sound obvious, but regularly depositing your takings rather than holding on to cash builds a clear paper trail of your revenue. Lenders heavily rely on bank statements when they assess your income, so a really transparent record of your income inflows can bolster your credibility when negotiating for lower interest rates. Keep a separate business bank account. Mixing personal and business finances can cause confusion, making it really difficult for lenders to evaluate your business's true financial position. Establishing and consistently using a separate bank account allows you to present a more accurate snapshot of your operations. It also simplifies accounting tasks, reducing errors, and ultimately aids in securing better loan terms. Use accounting software to track expenses and maintain up-to-date management accounts. Platforms such as Xero or Sage simplify real-time recording of expenses and allow you to produce accurate profit and loss statements, balance sheets and cash flow reports. Really key elements for many loan applications. Try to avoid arrangements with HMRC for VAT or corporation tax bills. While sometimes unavoidable in exceptional circumstances, being on a repayment plan for tax liabilities is really not a good look. Lenders often interpret these arrangements as a red flag, suggesting you may struggle with cash flow. So wherever possible, meet your tax obligations on time to reassure lenders that your business is in sound financial health. Keep supplier payments on track. Late supplier payments can adversely affect both your credit score and your relationships in that supply chain. Furthermore, many lenders will look at whether you have a pattern of late payments as part of their risk assessment. So consistent, punctual payments strengthen your credibility and demonstrate responsible financial management. Vital qualities if you're aiming for the more favourable lending terms that we all want. File your annual returns and company accounts promptly. Consistently meeting Companies House filing deadlines and keeping your annual accounts up to date helps maintain a solid business reputation. Late submissions can raise red flags for lenders, indicating potential disorganisation or financial stress. Try to retain sufficient cash reserves if possible. Keeping a healthy buffer in your business account signals to lenders that you can handle unexpected expenses, reducing their perceived risk. Don't leave it until the last minute to borrow money for cash flow. Try to plan ahead. Review potential security that you can offer. Lenders often offer the lowest rates when there's more security on the table. When I say security, I mean property, equipment, or just a personal guarantee. But by demonstrating that you're able to provide meaningful collateral, you're reducing the lender's risk and you boost your chances of receiving a much more favourable rate. Try to stay on top of personal financial commitments. For small businesses, personal and business credit profiles can be very closely intertwined, and ensuring timely personal mortgage, loan, credit card payments really helps to maintain a solid overall credit standing for you. In this first video, we have covered quite a lot, but you should have learned at least a couple of things on how to fine-tune your business and its administration to prepare for a future finance application, and how to look like exactly the type of business that banks and finance companies love to offer their lowest interest rates to. In the next video, we cover the importance of how to present yourself and your financials when making an application. We'll see you in the next video.